What's going on, everyone? This is Jordan with Conquer Trading and Investing, and this is our weekly Forex forecast and analysis for the upcoming week of March the 23rd to the 27th. Let's get right into it, everyone. It's going to be another busy week ahead. There's a few things that I want to get in front of you. Before we do, I want to talk about what's going on here with the copy trades. Now, this is really important. This is part of the Conquering the Markets. Now, the goal of this, when I set out to do this, was 7% per month, 125% per year. I know that's really lofty. I gone ahead and set up a automated system that, I have to tell you the truth, under normal market circumstances, probably could go on to achieve that. It was achieving that. If you look back over here, let me show you. It started in November, 7.4% return. December, another 14.7% return. January, 12.95%. And then in February, we only had a 1% return. So far this month, booked 6.37%. Open positions are obviously well into profit over here. Took profits right now, 165%, but I have to say that I am discontinuing this. This is not what I set out to do. It's not able to perform in a crisis. The system was simply not able to perform in a crisis. And therefore, it's not something I want to continue with. You could see that obviously the goal was, not only was the goal 7% per month, but the drawdown, me personally, was for max drawdown of about 25%, maybe 30% for these type of returns, which are phenomenal. I am discontinuing this because it's not what I set out to do. It is not able to withstand a crisis, and we're in a crisis right now. Okay, this was supposed to be set and forget. Obviously, the returns I set out to achieve were rather loftily. I don't think anyone else should be setting out to do 7% a month on their own, right? 125% a year. What I am going to be doing now is two things. The first thing I'm going to be doing is fall back to a system that is able to do with a contained drawdown 50, 60% a year. I know that's less than half of what I was setting out to do with this. It's just not sustainable. Now, years down the line, when we return to some semblance of normality, is it possible to break this out again and be able to put up these type of returns that I'm looking for? Absolutely. That's not what I'm looking to do now. I'm looking to navigate the current financial conditions we're in and what I expect over the next 12 months. So I'm going to go to something that's a lot more conservative. Even still being conservative, it will be able to produce somewhere what I consider to be still loftily returns for the average investor, 50%, 60% a year. At the same time, I also will be releasing to community members a systematic system that they could go ahead and follow those signals, and will receive those inside the dashboard as well. All right, let's get into the forecast. A couple of things that I really want to look at first is before we get into the week ahead. And listen, guys, right now the calendar is almost irrelevant. All right, I'm not even concerned about what's on the calendar on a day-to-day basis, because all this data is completely irrelevant. Central bank interventions, cuts, stimulus are almost also irrelevant right now. We're looking right here, though. This is something that I'm tracking. Out of the U.S., the Senate coronavirus bill should be passed early next week. They're now talking numbers such as $2 trillion. This started off at, I believe, about $750 billion. Moved it up to 1.2 trillion. Now they're talking $2 trillion. This could affect the market. Also, Germany is now no longer, they're willing to take on debt. This is big news. How it's going to affect the euro remains to be seen. Just be aware, we are in unprecedented times. What we have been looking at is a US dollar liquidity crisis. The world is short dollars, $12 trillion. Now that has to be paid back not only in principal but interest. But here's the problem. As trade slows down across the world, there's just less dollars available. You've seen the price of oil go from, call it $55 a barrel crude, all the way down now to 24, right? That was a way that countries were able to go ahead and collect dollars. That has been cut in half, as well as the demand for oil is slowing down. The last I heard weeks ago, it was down 20% in China alone. All right. Now, trade throughout the world is slowing down. Therefore, people's and countries' ability to get a hold of dollars is slowing down. Therefore, there is a need for dollars. You're seeing this being priced into the markets. And what's going to happen next week, I have to be honest with you. I do not know over the weekend. It's impossible to say where we're going to open up on Monday and what is going to happen early trading. That's why the best thing you could be doing now is go ahead, and if you're not already subscribed to the channel, do so. But the reason I say that is because every weekday, Monday through Friday, we live stream. We live stream, and what we do is we keep our pulse on the market. We figure out what is going on. We're able to then go ahead and navigate it, keep you on the right side of the market, that's for sure. We could take a look around over here and go over some things. I think one of the most important things to discuss is gold. All right, so let's start this off with gold. Now, listen, if you don't own physical gold in this to this day right now, it's getting harder and harder to get. Okay, all precious metals dealers are sold out of gold and silver. There's a backlog of a couple of weeks. If you're not yet invested in gold or silver, and I mean by holding the physical gold and silver, listen, start preparing. The best performing asset during the Great Depression was gold because it held its purchasing power. We are right now in a deflationary environment. Right now we're in a liquidity crisis, which is why you saw gold sell off 15%. 15% for the high. That's actually not so bad. In 2008, it sold off 30%. All right. Listen, gold right now, it could still trade lower. Unquestionably, gold could trade lower, but you need to protect yourself. Gold is insurance. Gold right now is a necessity. And again, if you don't own gold, definitely do consider now making whatever plans you need to start accumulating. Where do I see gold going from here? It's extremely hard to say. As long as we hold these lows over here, we put in a low early last week, and then on Friday, go ahead and almost took it out, and it held. As long as that level holds, you can see where my mouse is. Call it 1450. As long as that level holds, then I think we're going to be trading up to $1,600, and it could be as early as this week. I think we'll consolidate in this area over here right now. Unless we take out this 1450 level, at that point, then I think we could go much lower. I think we'll be looking towards 1380, possibly, if the 1450 level holds, and we'll take it from there. Do not worry about the paper price of gold right now. Even if it were to go down 30% from the highs, it's important to hold because you will not be able to time this market. We're going to go really, really quick. From a deflationary environment to a inflationary environment. It will be impossible to time. What you need to do is accumulate precious metals, accumulate Bitcoin in this environment. Let's move over to Bitcoin. All right. The reason we're not starting with FX right now is because, well, there's a lot of moving pieces right now. I'm talking about what is important right now, and that's owning what's going to be the leaders in the year to come, and that's going to be Bitcoin and it's going to be gold. All right. Right now you're seeing, again, liquidity crisis. All asset prices were down. It even affected Bitcoin. Now this was exacerbated, this fall over here, from around 65 or $6,000, we'll call it, to 3,800. This was liquidations on leveraged Bitcoin exchanges such as BitMEX, right? It got liquidation. They had to go offline. As soon as they went offline, the price within an hour jumped all the way back up towards $5,800. We're now settling in around $6,100. Either way you look at it, whatever is going on right now, there's a lot of money being printed by central banks. There's a lot of money being printed by governments. You're seeing Germany taking on debt. You're seeing the White House talking about a $2 trillion package. Where is all this money going to go? This money is going to go into hard assets, scarce assets, Bitcoin and gold. If you're trying to time this, instead of thinking about we are 50 days from the halving, which leads to historically the bull market phase and mania of cryptocurrencies and Bitcoin, led by Bitcoin, 6,000 Bitcoin, 5,000 Bitcoin, 4,000 Bitcoin, 10,000 Bitcoin is all cheap. This is an asset if you don't own it yet. I also believe that you do want to own. Do not try to time this market. Again, things could go rather quickly. We go from deflation to inflation rather quickly. Now, let's take a look at some important things. And again, I recommend following the daily live streams to get a better idea of the flow of the market, because I cannot tell you what is going to happen as we open up tomorrow in Asia on Monday morning. I cannot tell you what happened. I'm personally still holding short Euro US dollars. I built a position between 1200 and 1400, and I'm still holding those, and I'm not looking to give up those positions. Is it possible we gap up higher here? Anything's possible. I have no idea what's going to happen, but I am and remain in this moment very strong bullish towards the dollar. There are a couple of things that I do want to look at with you. The US dollar, Japanese yen. I'm going to zoom out over here. And the reason I want to look at this with you is because now that we're above this trend line over here to the upside again, this blue line over here, 109.71 above it, I am extremely bullish the dollar over the Japanese yen. This will change if this was a failed breakout. All of us got really bullish on the yen below this 109.71 level, this blue line. This could happen again. If this is another false breakout, we're willing to switch our view really quick. But right now, I'm just following the charts. And the reason I'm following the charts is you're seeing some extended moves. If you look at the US dollar, Canadian dollar, and if you look at the US dollar, Mexican peso, look at this breakout over here. Look at these moves are just phenomenal that we're seeing right now. I'm following the charts, and look at this. Look at these moves are just phenomenal. There is a dollar liquidity crisis right now. So if the US dollar, Japanese yen is showing me that it's breaking out again, I'm willing to follow it. I don't know where it's going to lead, or if I have to reverse again under this blue line, 109.71, 108.86, definitely will be a confirmation that, I am now again a yen bull. But things are changing. We are in a unique environment. It's like nothing we've ever seen. The magnitude of this crisis is going to be like nothing we've ever seen, as was the everything bubble itself, which has now simply been popped. This is not necessarily because of the coronavirus. The coronavirus was only the catalyst. Right now, we are seeing, and I don't know how long it will last, but right now we are seeing absolutely that US dollar strength. And could we go much higher? We could. Listen, those of you who've been following our weekly Forex forecasts know a couple of things. Down over here in December, we warned that we were at the bottom of the channel. We were looking bullish. We didn't expect to break out of this bear channel necessarily here, but we were saying the whole time, we expect the resolution of this bull flag will be a break higher. We broke higher, traded all the way up to 99.72, and then we had this enormous sell-off. Down over here, we were saying, listen, we're going to be testing 99.50 again. Did I expect that we would take out 99.50 and be trading all the way up to 103 a week later? No. Am I surprised by it? No. Would I be surprised if we trade down again? No. And I won't be surprised if we come up and we take out 103.82 over here and we head up even as high, 120 is the high that comes into play next. So here you go, right? Are we headed up there? It looks like it, all right? Again, this is a fluid situation. This is like just back in 2008 when things are changing, right? Things are changing. You need to stay up to date with us. Other things that I want to talk about right now in this weekly Forex forecast with you, though, is we're seeing a little bit of pullback on Japanese yen and Swiss franc pairs. Now, I think what I'm getting at here is I think the way that I see things is I think that the earliest, the peak of this virus is at least somewhere into May or June. The best case scenario, right? We are looking at severe economic damage. We are looking at a depression. I think that this is just a bounce here on the. I'm looking at the weekly. Let me put down to daily for you. I'm looking at the Australian dollar, Swiss franc. You can see we didn't get yet above this resistance. I am waiting patiently to see if we get any type of retracement or bounce, and to looking to fade these again. I am being patient, okay? I'm waiting for the right opportunities. We're seeing currency pairs now move 3%, 2% a day, which, going back just even a few weeks ago, 1% a day was a big move, all right? Just do not be in a rush. If this is the time, I've been screaming this, trying to ingrain it in everyone's head since 3 weeks ago when this environment changed. Now is the time to become a position trader. Now is the time to become a position trader. Fortunes could be made under this environment. Fortunes could also be lost if you're not trading smart and you're all over the place. Fortunes could be made in this environment, and I want you all to be able to sit back over here and get yourself into good positions. The best thing that I see right now, right, is long US dollars. I'm holding mine, right? Now, and just to show you, nothing's easy, all right? Let me just show you this really quick. Going back, this was Thursday over here, right? We went from a low of, call it 1.065 all the way to 1.82, all right? Now, a lot of traders probably flip-flopped and started going long over here. I'm still holding my shorts, and I'm just holding them. Do I expect that we're going to be trading back up towards, 1.12, which is the bottom of my entries? I don't think so. Do I think we're going to trade down towards 1.035? I think there's a strong possibility, and I think there's even a strong possibility we could trade back down towards 80 cents and or lower. All right? So this is a time to build positions and hold positions. It's a fluid situation. If things change, will change. I made some big mistakes over these past few weeks by not holding on to my New Zealand dollar Japanese yen shorts, my New Zealand dollar Swiss franc shorts, same level, almost same exact level, and the Australian dollar Swiss franc. I'm not in a rush yet, even though we've seen a bounce yet, to re-establish those positions. I will when the right opportunity comes across. What I really want you to do, though, is definitely change your thinking. Stop being short time frame minded. Get a portfolio over here that is going to perform over the next 1, 2, and 3 months, because we're going to see some crazy levels in the foreign exchange. And foreign exchange volatility is picking up. You've seen that on the US dollar, Canadian dollar. You've seen that on the US dollar, Mexican peso, but not across the board yet. And it's going, look at these moves. All right? I want you to start capturing these moves. I want you to pay more attention to what we're doing on a daily basis. And all right, everyone. I'm here to help you through all of this. I am here to help you through all of this. Everyone that's staying updated with us, everyone that is part of our community, and what a community we have, has definitely been navigating this as best as possible. I want you to be a part of that too. I want to help you. Listen, I can't give you a normal Forex forecast this week and tell you what we're looking at, because things are going to be entirely different after this weekend. I have to see where we open up on Monday. I have to see what happens overnight in London. We'll take a look at it during New York, and we'll take a look at it day by day. I need to change your thinking, though. I need to get you stop being so short time frame minded and really get you positioning here. Not only do I want to help you survive what is coming, and what is coming is we are looking at a crisis of a magnitude we've never seen before. We are looking at 2 specific periods coming up in the near future. We're looking at a depression, deflationary environment. The amount of loss of jobs is going to be enormous. This is leading to deflationary pressures. We're going to see a world depression. And then after that, we're going to see an inflationary environment, hyperinflation. I want to help you through all of this. Stick with me. All right, everyone. Be safe, and I'll talk to you soon.